distribution strategy, a plan for delivering the right product to the right person at the right time. Channel of distribution, the network of an organization and process that links producers to consumers. Retailers, distributors that sell products directly to the ultimate user, typically in small quantities that are stored and merchandised on the premises. Wholesalers, distributors that buy products from producers and sell them to the other businesses or non-final users such as hospitals, nonprofits, and the government. Supply chain, all organization, process, and activities involved in the flow of goods from the raw materials to find the consumer. Logistics, a subset of supply chain management that focuses largely on the tactics involved in the moving products along the supply chain. Break-even analysis, the process of determining the number of units a firm must sell to cover all costs. Management, achieving the goals of an organization through planning, organizing, leading, and controlling organizational resources, including people, money, and time. Human skills, the ability to work effectively with and through other people in a range of different relationships. Maslow's hierarchy of needs theory, a motivation theory that suggests that the human needs fall into hierarchy and that as each need is met, people become motivated to meet the next highest need in the pyramid. Job enrichment, the creation of jobs with more meaningful content under the assumption that challenging creative work will motivate employees. Test 12.
They didn't want to, but they had to. Now you got 21 seconds. Now Macklin comes back.
Test 11.
But no timeouts. You got to get into field goal range and either get out of bounds or...
Product. Anything an organization offers to satisfy consumers' needs and wants, including both goods and services. Quality level. How well a product performs its core function. Product consistency. How reliable a product delivers, it promotes level of quality. Consumer benefit, the advantage that a consumer gains from specific product features. Cannibalization, when a producer offers a new product, it takes sales away from its existing products. Brand, a product's identity, including product name, symbol, design, image that sets it apart from other players in the same category. Brand extension, a new product in a new category introduced under an existing brand name. Co-branding, when established brands from different companies join forces to make the market the same product. Product of life cycle, a pattern of sales and profits that typically change over time. Promotion, marketing communication designed to influence consumers' purchase decision through information, persuasion, and reminders. Product placement, the paid integration of branded products into movies, televisions, and other media. Advertising, paid non-personal communication designed to influence a target audience with regard to a productive service, organization, or ideal. Quiz 10. Marketing, an organizational function and set of processes for creating, communicating, and delivering value to consumers, etc. Value, a customer's perception that a product has a better relationship than its competitors between the costs and the benefits. Customer loyalty, when customers buy a product from the same supplier again and again, sometimes paying even more than the competitor product. Target market, the group of people who are most likely to buy a particular product. Demographic segment, dividing the market into smaller groups based on measurable characteristics about people such as age, income, ethnicity, and gender. Marketing mix, The blend of marketing strategies for products, prices, distribution, and promotion. Market share. The percentage of a market controlled by a given marketer. Consumers' behavior. Description of how people act when they are buying, using, and discharging goods and services for their own personal consumption. Marketing research. The purpose of gathering, interpreting, and applying information to uncover marketing opportunities and challenges and to make better marketing decisions. Quiz 9. Financial markets. Market that transfer funds from saver to borrowers. Federal Reserve Act of 1913. The law that established the Federal Reserve System as the central bank of the United States. Bank Act of 1933. The law that established the Federal Deposit Insurance Corporation to insure bank deposits. It also prohibited commercial banks from selling insurance or acting as an investment bank. Security and Exchange Act of 1934. A federal agency with primary responsibility for regulating the securities of industries. Financial Service Moderation Act of 1999. An act that overturned the section of the Banking Act of 1933 that prohibited commercial banks from selling insurance or performing the function of investment banks. Common stock. The basic form of ownership in a corporation. Capital gains. The return on an asset that results when its market price rises above the price the inventor paid for it. Bond. A formal debt instrument issued by a corporation or a government entity. Par value. The value of a bond at its maturity. What the issuer promises to pay the bondholder when the bond matures. Current yield. The amount of interest earned on a bond, expressed as a percentage of the bond's current market price. Exchange traded fund. Shares traded on securities markets that represents the illegal right of ownership part of a basket of individual stocks, certificates, or other securities. Public offering. A primary market issue in which new subscribers' securities are offered to any investor who are willing and able to purchase them. Stock index. A static that tracks how the prices of a specific set of stocks have changed. Quiz 8. Financial capital. The funds a firm uses to acquire its assets and finances its operation. Finance. The functional area of business that is concerned with finding the best source and use of financial capital. Financial ratio analysis. Computing ratios that compare value of key accounts listed on a firm's financial statement. Financial leverage. The use of debts in a firm's capital structure. Line of credit. A financial arrangement between a firm and a bank in which the bank pre-approves credit up to a specific limit, provided that the firms maintain an acceptable credit rating. Commercial paper. Short-term funds, usually unsecured, promissory notes issued by large corporations. Retained earnings. The part of a firm's net income it reinvests. Capital structure. The mix of equity and debt financing firm uses to meet the permanent financing needs. Present value. The amount of money that, if invested today at a given rate of interest called the discount rate, would grow to become some future amount in the specified number of time periods. Quiz 7. Accounting. A system for recognizing, organizing, analyzing, and reporting information about the financial transaction that affects the organization. Generally accepted accounting principle. A set of accounting standard that is used in the preparation of financial statements. Financial Accounting Standards Board. The private board that establishes the general accepted accounting principles used in the practice of financial accounting. Income statement. The financial statement that reports the revenue, expense, and the net income that resulted from a firm's operation over an accounting period. Balance sheet. A financial statement that reports the financial position of a firm by identifying and reporting the value of the firm's assets, liabilities, and owner equities. Budgeting.
Christmas Eve has turned
A magnet tool that explicitly shows how a firm will acquire and use the resources needed to achieve its goals over a specific time period. Statement of cash flows. The financial statement that identifies the firm's source of use of cash in a given accounting period. Fixed cost. Costs that remain the same when the levels of production changes within some relevant range. Variable cost. Costs that vary directly with the level of production. Words for 12. Quiz 12. Distribution strategy. Channel of distribution. Retailers, wholesalers, supply chain, logistics. Break-in analysis, management, human skills, Maslow's hierarchy of needs theory, job enrichment. Words for quiz 11. Product, quality level, product consistency, customers benefit, cannibalization, brand extension, co-branding, product life cycle, promotions, product placement, advertising. Quiz 10 words. Marketing, value, customer loyalty, target market, demographic segment, marketing mix, market share, consumers' behavior, marketing research. Quiz 9 words. Financial markets, Federal Reserve Act of 1913, Banking Act of 1933, Security and Exchange Act of 1934, Financial Service Moderation Act of 1999, Common Stock, Capital Gain, Bond, Par Value, Current Yield, Exchange Traded Fund, Public Offering, Stock Index. Quiz 8 words. Financial capital, finance, financial ratio analysis, financial leverage, line of credit, commercial paper, retained earnings, capital structure, percent value. Quiz 7 words. Accounting, general accepted accounting principles, Financial Accounting Standards Board, income statement, balance sheet, budgeting. Statement of cash flows, fixed cost, variable cost.